ZIM, the shipping company, announced their earnings today, and the overall impression I'm getting is very positive results. They did really well in the fourth quarter and finished off a very good year. They provided a very big dividend announcement as well. Overall, the shipping industry is vital to the global economy, and ZIM has been one of the best operators I've seen out there. I've invested in ZIM in the past. I'm currently not a stockholder. I believe that the shipping industry gets really low valuations. They don't value up to their intrinsic value based on cash flows. It just is what it is. Investors don't view this as a really long-term play. So I try to manage the time I'm invested in a company like ZIM, which is why I sold my shares in 2024 at a really nice appreciation rate. Let's take a look at the stock and see if it's a good investment at this time. I'll look at their financials that they just released for the full year and do a full value evaluation of the company. I look at intrinsic value of a company, and that's based mostly on free cash flows that I expect the company is going to produce in the future. Being able to look at the net present value of those free cash flows and see if the stock is being sold at a discount compared to the intrinsic value. Now let's get into the press release that the company announced this morning. So overall, the company performed really well. Their revenues increased by 26%. Their profitability went up 44%. Their EBITDA went up 30%. So that was really good. Overall, their volumes of shipping have gone up substantially. The advantage that ZIM has is they have a newer fleet of ships to use that use natural gas. They're more efficient, less expensive, and in some ports are allowed where older ships that are dirtier, more polluting are not allowed. So that gives them an advantage. They guided to some extent on how things are going to be next year, and they're optimistic that they're going to operate well because they have advantages, but they can't be really clear, nobody can, on how the global economy is going to act in 2025. We have the whole tariff war, I guess, and it's really escalating. Now, is that going to create lesser demand for goods? Potentially. Is that going to change the amount of demand? It could. It could. I just don't know. I know it's going to be a factor in how much shipping is going to be handled. It also could create a really imbalance, and imbalances in supply chains could result in positive news for ZIM. If you recall, when we had COVID, there were a lot of goods that weren't being produced, and therefore there's a lot of demand, excessive demand for goods, and things needed to be shipped a little more expedited, and shipping rates really went up. At that time, ZIM was incredibly profitable. So the tariff war may actually be a positive bit of news for them. If we create a real imbalance in the global supply chains, I would see that in a year or two, this might be a great stock because if shipping rates were to double, as an example, the profits for ZIM would just go through the roof. And I think the stock would double, triple in value very quickly, like it did a couple of years ago. ZIM is a small cap. They're $2.45 billion in market cap. And the revenue is way up there at 7.5 billion. The forward PE is tiny, less than 3. Can you, like, putting my head around that number is pretty hard because when you look at a technology stock, you might be looking at a stock that has a 60 PE. These guys are at a 3. And that goes back to the fact that the stock market doesn't pay a lot for shipping companies. It actually views the cyclicality as a negative. A lot of bad things could happen in the future, like shipping rates really go down. There's a glut of supply of ships, and therefore the shipping rates really collapse. So I think that's what's being factored into a PE that is this low, but I would argue that they deserve at least a 9, in my opinion, because they're growing, they're operating really well, their volumes are growing, and so forth. Analysts think it's a sell, and it's being priced too high. I'm going to be curious to see where that is. Over the past year, this has been an absolute winner. 84% rate of return or appreciation. And you look at that dividend, 23%. They just announced their dividend. It was a little over $3. So it's going to be a huge dividend again. So investors are winning two ways. The stock is appreciating, especially if you bought in the late spring timeframe of last year, and the stock's really risen. In the pre-market, the stock's doing really well. It's up 3.4% now that the earnings have been announced. The market likes what they're seeing. When we look at the forecast, there's 5 analysts that cover the stock, and the most optimistic analyst is at a $22 price target. And there are some pessimistic analysts, some bears, and they believe the stock is only worth about $9.25. The forecast is that the company is going to see a decline in sales, predominantly based on shipping rates. And that might be due to an expected recession. I think a recession could happen in the United States. If it does, less demand, less shipping is needed. And I think shipping rates could go down. So volumes could go down and shipping rates could go down. So I can't argue too much with that type of expectation. So maybe that's what's really holding back the stock, that in the future, in the year we're in, the profitability is going to go down. And then in next year, 2026, they might even operate at a loss. When I look at the value of ZIM from a free cash flow perspective, the value of the company is just really, really high. It's actually 264% higher than their current stock price, which is a huge, huge bump. And consider that this year, the free cash flows are 3.5 billion. And I'm actually declining the cash flows over the next 4 years by 25% per year. So just putting an expectation out there that, yeah, shipping rates could go down. It could be a couple of tough years in the future. But even having done that, it's still the intrinsic value of cash flows is much higher. When I look at earnings per share, I guess I'm in agreement with the analyst that based on earnings per share, the stock is priced a little high. Overall, this gives me good data to make decisions. If I see that the economy, the global economy, is going to need more shipping, or maybe there's another supply chain imbalance, like a supply chain issue that causes shipping rates to really go up, that's going to be really good news for ZIM. So I would really want to study what's going on with supply chains, and potentially enter into ZIM at a good price point and look to stay in the stock for a period of time. I don't see ZIM as being like a 5-year hold. It would be maybe 6 months, maybe 9 months, maybe 12 months. Get in and get out and define what my exit strategy is going to be when I buy the stock. That way I know, hey, if I go up 30%, I need to get out. If I go down 20, 25%, I need to get out, and have that type of discipline as I buy into ZIM. And the reason I do that is ZIM could go into a real bad decline, and I don't want to stick around for that. And also, it could also rise quite well, but then the stock drops. Let me show you a graph to prove that point a little further. Looking at the stock for the past year, you can see that the stock has rallies and then it falls, rally, fall. It just keeps going up and down. And I don't expect anything different unless there's a big new factor that enters this picture. If shipping rates really rise, like they go up 30%, 40%, this stock's going to take off. So what I've been trying to do is find a good price to buy ZIM. And I had previously put a buy order at $17, but now the stock's moving higher. I'm probably going to reassess my plan on ZIM and see at what point I would be willing to enter the stock. For now, I'm going to let the stockholders enjoy that really big dividend and enjoy the nice rise of 4%. How desirable is the ZIM business? Now, shipping companies have plenty of competition, so there'll always be competition. I think that companies like ZIM, and specifically ZIM, belongs in the gray. And the reason for that is, again, there's plenty of competition, and it's not like ZIM's just going to dominate all the shipping in the marketplace. It's not going to be like Amazon that just constantly gets better and better and becomes more and more important. And its actual barrier of entry is the fact that their network is just so big. People just think of them as the first choice in buying goods. ZIM is not in that position. They're just a good company. They're in the gray. Their competitive advantage right now is that they have newer ships, but that's going to be temporary. in 5-10 years, those ships will no longer be new. They have to rebuy ships, infuse capital into the business, and then rebuild. If there's potentially other shipping companies that are willing to operate at a loss, that can be a competitive threat against ZIM as well. So those are the reasons why it's a good business, but it's in the gray. It's not in the green. It's not one of those really desirable businesses that I would hold. That said, I'm going to hold off on buying any ZIM stock as of today. I think the stock is going up 4% or so. I think the stock deserves that price. I hope the stock goes up even higher, especially for ZIM stockholders. I would love to see them be compensated. But I'd like to see the stock come down to maybe $17, maybe $18, and then I'd be a buyer at that price. That would be my price target. I think I could have a good risk reward scenario at $17 to $18 per share. And I could probably buy the shares, then exit after I made 30%. So that's my video on ZIM. I hope you found it interesting. If you're a ZIM stockholder, congratulations. It was a heck of a year for 2024. Enjoy that dividend. Thank you very much for watching. Good luck investing.